Hello, everyone. I'm so excited. This really is an important conversation we're about to have with Dan Doney, the CEO of Securities. We're talking about securitizing tokens, blockchain stuff. This is heady, important stuff. You don't want to miss this episode.
Welcome to the Your Mark on the World show with your champion of social good, Devin D. Thorpe.
Dan, welcome to the show.
Thank you, Devin. It's really my pleasure to be here.
My gosh, this really is such an important conversation. There are just so many things that we need to talk about. I want to just jump right in. So, Dan, the SEC, even in just the last few days, has been churning the waters around ICOs, as we used to call them. I don't think many people are still using that term, but last year that's what we called them. Tell us about the regulation. What's going on from an SEC standpoint?
Well, so the SEC is doing what it always has done, ensuring that it protects investors in the United States. And you find an important part of running an effective economy is to make sure that you protect investors generally. This helps people confidently invest their money in good offerings, and they can have an assurance that they're being told the truth, that their money will be properly handled in that process, which is just key to unlocking a healthy economy. We learned lessons in the 1920s. At the end of the 20s, there was the Great Depression set in. From the roaring 20s, many of the folks who had made money on Wall Street went out and preyed on folks who were at the retirement phase and sold them bad instruments, basically snake oil salesmen, to the extent that people were losing their life savings in this. And the Securities and Exchange Commission was formed and stepped in 1934, the act that really governed what a security was passed to protect investors. Fast forward 80 years, and you find the space saying, hey, those rules no longer apply. This is a new world. It's the blockchain community, and this is a different place. What you find is a substantial number of the offerings that came up in the space that ignored those rules actually were either fraudulent, money was mishandled, people were not easily held accountable, and so the SEC, of course, steps in. This is what happens without proper regulation. So the thought is not, do we ignore regulation? The regulations, the rules are there for a good reason. It's how you automate those rules that makes this very efficient. Makes it, what ICOs uncovered, and the reason for the excitement, is it was a much more effective way to raise capital. You found a much more direct connection between the issuers without as many intermediaries and the investors. That was exciting. You just had to build in and automate the actual protections. And that's what's so new and exciting about the security token space, is you get the best of both worlds.
Yeah, so are all token offerings securities?
It is possible that there are offerings that are utility offerings that from the time when, generally in this case, it would be someone effectively purchasing a right to do something that they can use at that time, where something would not be a security. But anytime someone is investing without participating actively for the purpose of a return on their investment, it's a security. So if you're not investing for the purpose, if you're not putting your money into something for the purpose of a return, what are you doing putting your money into that thing? So what you find is across the board, almost everything you see is in fact a security. And if you're not absolutely sure that it's not, then you should really treat it as one.
Yeah, I think that's good advice. So what does that mean? And I realize this is a bit of a tangent, so just give us the quick answer. What does it mean for people who are holding Bitcoin?
Bitcoin's a great asset, but it is in fact an example of something that's not a security. So Bitcoin's value really is based on the utility of Bitcoin's blockchain network to move value efficiently. And so people want to have Bitcoin because they can easily move value based on the Bitcoin network. And so it's held that value, but the value is somewhat subjective, the utility of the Bitcoin network, and subjective value is quite volatile. And so, unfortunately, at the time of us filming this interview, Bitcoin is having an absolutely abysmal year, week, month. And so this is a reflection of having assets whose value is purely utility.
But
But in fact,
you're not worried that the SEC is going to sort of retroactively try to subject Bitcoin to offering rules and punish issuer or anything else?
no, I'm not. They've actually made their position on Bitcoin fairly clear, and so this makes us confident in the value of Bitcoin as a utility network. We love Bitcoin. We think it's a very powerful tool. It's certainly ushered in a whole new era. But we came into this market specifically because we didn't see assets that had investment characteristics, that were investment grade, investment worthy, that would hold stable value over time, and in particular, income producing investments, which have a natural price stability because as their price goes down, their yield goes up. And so we came into the market in 2015 to actually create those types of instruments, which are undoubtedly securities.
Yeah. So have you completed any offerings at this point at Securities?
Yeah, we're actually about to issue our first tokens as part of an offering, Quantum Real Estate. And that particular offering, again, is a security. We're building into it. One of the unique things about Securities as a platform is our ability to incorporate very complex securities laws into the tokens themselves, such that they govern themselves. So they only can participate in transactions between known and qualified users. And again, this actually helps automate much of the compliance process. And so it really is a new day.
So this is know your customer, anti-money laundering, the KYC, AML kinds of things that people in the industry talk about, right?
That's right. And more, right? So there's accredited investor verifications. There's other limitations based on Rule 144, the 12G1 rules. So there's a lot of rules that need to be enforced in the trade and transfer of security tokens. We produce nice, easy, even a lawyer can read the rule sets that are attached to these tokens and that govern the token's behavior. So it makes it very easy for a regulator to look in and see that the token is behaving as it should. And this again is so much of an improvement on the old securities world. So there was very uneven practice in the old securities markets, traditional securities markets, in terms of the way that investors are onboarded and qualified in the process and rules are enforced. We've seen in our own experience, you go to 10 different law firms and you get 10 different answers in terms of the steps that you need to take. This makes it nice and easy and codifiable and repeatable. Now the rules are varied. There are many different instruments in the space, so you have to have a platform and a capability that can incorporate different types of securities.
Now, it sounds to me that what you're describing is a Reg D 506C offering. Are you also using Reg A or A plus? Are you also using Reg CF? Or are you registering these under, is it Reg S, like you would do in a traditional IPO?
Yes. So our first is a Reg D. We will do a Reg S as well that follows this. We've got a very exciting set of Reg CF offerings coming up. We've yet to do a Reg A plus offering in the space, but we see that coming. There's no reason not to. We're also based overseas, so we expect to incorporate overseas securities laws into the token offerings as well in the UK, in the Middle East, and in Asia.
Now, under Reg CF rules, it's interesting in that the original law anticipated that the securities would trade, which is interesting when you think about securities that are issued in such a small dollar value, $1 million offering that might trade, but only after a year. Have you built those nuances into those coins or those tokens?
We have. Yes, and in fact, and I'll give you a couple of those nuances just to get a little bit technical on this.
Please.
But it actually, what's cool about it is Reg CF envision is a great law because it helps bring more people into the investment world. And unfortunately, under the old regulations, you had to be accredited, so you had to have a certain amount of wealth before you could participate in the upside of many early offerings, which meant that many people were excluded from the benefits of these early offerings. And Reg CF was really intended to overcome that. However, the size limit of $1 million associated with these offerings was impractical to enforce. So the cost of making sure that you had a compliant offering starts to significantly cut into the size of the offering itself. And this is what's so exciting about the security token world. Based on the power of our platform, and there are others in the space as well, we are so significantly driving down the cost of capital formation that it actually becomes practical to work in the Reg CF space. And what that means is we open up whole new venues for people to raise capital to prove out their good ideas. And of course, that new liquidity is really causes a birth or a rebirth of innovation. So it's very exciting from an economy perspective to be able to uncover and finally unleash the power of the regulation, the intent of the Reg CF rules. Now, there's a couple things that you have to do in any case, just to give you one of the technicalities. You need to know who holds your security. It's a very important, when securities are easily transferred as if they were currencies, you start to run into Bank Secrecy Act considerations associated with these securities. And of course, that's not something you would practically get with a piece of paper as security. But you still need to know your customer. You need to know, even after issuance, who holds those tokens for a wide range of different reporting requirements, not to mention capital gains, tax reporting, et cetera.
And for investor communications.
Investor communications is another one, governance and investor proxy voting, et cetera. We've built all these into a nice, easy platform. It's striking how much back office functions, which tended to be performed by the investment banks and at great cost, suddenly become very cheap, expensive, and highly accessible. And the cool thing from an impact perspective, Devin, I know this is an interest of yours, is instead of these sophisticated financial services really being limited to the world's financial centers, you have to be tied into New York or London or Tokyo or Singapore. Suddenly, because of the power and reach of blockchain, these are available to folks globally. And this really opens up a whole new set of possibilities. And there is a major impact associated with this model.
Yeah, it's fascinating. So Securities is principally a technology provider. Are you also registered as a broker-dealer with FINRA, or are you partnering with other people who are? How does that work?
Yeah, that's exactly right. So we are a technology provider to folks who are registered as broker-dealers. So our typical customer base is the broker-dealers who are looking to move into the new, get the benefits of low-cost issuances, and who are looking to move into this new blockchain-enabled world.
So you could also, in theory, partner with a Reg CF portal, or is it platform? I always forget the word in the regulation, but
portal, and there are a number of those now as we're in discussions and some advanced discussions exactly in that regard. You should see something coming in January.
I'm very excited to follow that. Very, very exciting. For real startups, early stage startups, that first $1 million is really important, and making that affordable and executable. That's exciting stuff to me.
Devin, I want to underscore the importance of that point. This is where most exploitation occurs. It's where, frankly, someone who's junior doesn't know how to raise the capital, is just taken by venture capitalists. Nothing against venture capitalists. They are seasoned and responsible in what they do. However, it's where people lose a lot of their equity and then don't have what they need to really take full advantage of the value that they bring to the market. It's the same exploitation. We actually started our crypto issuances, our token issuances around the topic of developing world farm finance. As I think I mentioned this to you before the interview, we were working with farmers in Pakistan and Thailand to help get them low-cost credit with securitized lending pools. And the impact and reach of these models, there's simply no way that the table stakes in New York City for a securitized lending pool is $500 million. That's simply beyond the GNP of many of these countries. Lack of access to capital results in exploitation in the worst sort of ways in many parts of the world, whether it's in the startup world exploitation or people just getting the low-cost capital that they need for the seeds and fertilizer for the coming year. This is a new model, and really finally we can help bring an end to some of the exploitation that occurs in those settings.
Obviously, one of the really fascinating things about what you're doing is cross-border work. There is an SEC or a similar regulatory body in virtually every country in the world. So you've got to deal with this 182 times or something.
That's right.
How's that going? Where are we in that process?
Yeah. So there's really two sides to any securities transaction. There's the issuer and the jurisdiction that they fall under, and then the investor in the jurisdiction that they fall under. And this was the long pole. As I mentioned, we came into the market in 2015, showed that we could produce security tokens. Tokenization is easy. The compliance piece is hard, precisely because of the global reach of blockchain. It's both an advantage and it's also a barrier to entry. So it took us some time to build out the kinds of frameworks that can incorporate securities laws from 180 different jurisdictions around the world. And that model, we do it through something that we call our rules engine. It makes it very easy to map in the securities rules and save them as recipes. So this creates a framework by which legal teams from around the world can codify into machine-readable code effectively, but in a nice, easy-to-read format, the securities regulations associated with their government, and then reuse those recipes over and over again as they're attached to tokens and govern their behavior. We're, as I mentioned to you, working in the Middle East, and there's a particularly progressive regulator there in the ADGM who's actually building their regulations as machine-readable code, which we can actually take then directly inject into to govern the tokens themselves. What's so exciting about this is they can actually govern the behavior of their financial services network directly. And it is a very powerful future that we're talking about here to help shape and drive capital to where the opportunity and where the need is most profound.
You were thinking about these things, obviously, long before the rest of us got there. In the very earliest days of the SEC starting to sniff around this community, you were thinking deeply about this. That's very interesting. I mentioned that only as an observation. You've got a big team on the order of 100 people now, a lot of super qualified people. Where did all the money come from? You're just barely starting to generate revenue. You must have raised some capital.
Yes. So we are, despite the size, we're a very lean organization across the board. So almost all of our use of proceeds has gone to development of the product. Many folks don't know us precisely because we were keen. We wanted to have the product to market, not market what the product would be. In this, it's just our nature. I'm a technologist by nature, come from government settings, as you know. We were also too early in the market. Your observation is right. When I would talk about this 3 years ago, emphatically excited about how the world is going to need security tokens and how much this transforms finance, no one knew what I was talking about. They said, what's wrong with Bitcoin? So that forced us to be a very lean company. And we invested all of those proceeds in building out the capability. But now we have the capability and we're really beginning to show the world what's here. Where the money came from, we started with a great friends and family round. And we were able to raise money in a number of different settings along the way to sustain operations. And so again, we've done that in a very quiet way as well, sort of hard work and gritty style.
It sounds like you've raised relatively modest amounts of money, but can you tell us how much that is in total?
Yeah, it's roughly $9 million. We have an open note now, and so we're in the process of raising again That's why I'm not giving you a specific number, because it's changing pretty rapidly here. We intend a significant equity round in the springtime as well.
I suspect, you tell me, I suspect that there are people in the crypto community who have accused you of blasphemy or treason because of your adoption, your integration of regulation, because of the deep, frankly, the foundation of crypto really was kind of a libertarian notion of circumventing government regulation in many respects. And so that spirit really pervades the crypto community. Am I wrong in thinking that people have made that accusation? And when they do, if I'm right, how do you respond?
Yeah, so this was definitely a challenge early on as we came forward with this model, emphasizing compliance along the way, as folks saw pure decentralization as the solution to this. The bottom line, look, I'm actually a libertarian by nature in terms of my approach to this, but even libertarians, we recognize the importance of some basic laws to maintain good order in terms of the political mindset. And so it is. Governments have a responsibility to protect their citizens. They absolutely must. And what you see in environments that are completely unregulated, early Bitcoin environments were certainly, this was true. You saw it being a safe harbor for traffickers and launderers and other ne'er-do-wells of all sorts. The kinds of things that anyone objectively would say, that must be stopped. And so governments have a responsibility to do this. We believe in minimalist rules, so make the regulations, the rules that are there for a good reason, efficiently executed and enforced, such that they don't hold back idea and value creators in terms of their ability to innovate in general. So that's a key balancing point. So what we say is decentralize as much as possible, but recognize that rules are important and just decentralize the enforcement of those rules. What's interesting is this model puts pressure back on governments. So when you can so effectively raise capital because you have the proper rules in place, you protect citizens, and folks are able to invest in opportunity well, if you're in a government that hasn't embraced that speed, suddenly the investment in productivity goes elsewhere. Here in the US, it was that effective allocation of capital to opportunity that led to Silicon Valley, which resulted in a productivity advance in the United States over other competitive nations. But if others gain that competitive advantage of efficient allocation to capital, we will quickly lose our lead here in the US. And so it's a matter of, if governments are inefficient with their regulations, the value will go elsewhere. So it quickly puts pressure on the governments to be as efficient as they can. We know that, so we've had frequent conversations with the SEC, and they very much care about efficient capital formation. And so they want to see the rules streamlined and enforced in a way that allows, that doesn't hold back the value creator, but at the same time protects investors. So there is a balance out there. There is no pure view on either side. And we just happen to be pragmatists from the start.
Well, I appreciate you sharing that. It seems to me that the issuers that can take advantage of your technology depend very much on the intermediary you partner with, the investment bank. So some people will be listening to this thinking, wow, I wonder if I can do this. Um, what guidance do you give them?
Yeah, so this is why we use the term decentralized investment banking services, because we actually expect to make the investment banking world quite competitive by providing simple and easy rails by which someone comes on and performs the essential function, which is analysis and due diligence to protect investors, by providing them all of the other tools and the baseline infrastructure so that the people who do analysis and due diligence best and most efficiently are given the rails to do so as a service to investors and issuers, and in driving down the cost so that it's not floors of compliance officers and accountants and heavy management who are actually all living off of the work of the analysts who are on one floor in the investment bank. Drive that down so that they perform those efficient services, again, to drive capital to opportunity.
Can people, in your vision of this, you think that in relatively short order, people will be able to trade Ford and GM on using your technology at some level? And give us a sense of whether I understand that correctly, and then how that would happen.
Yeah, so that's what we know is driving and is happening fast is private equity. The things that aren't typically liquid at all, where an investor comes in and faces a long lock-in period, and this includes for equity in startups. That's moving to this model precisely because it's easy to beat the way things were in the past. There was no liquidity, and so now you're getting increased liquidity, and that's a benefit to investors. Public offerings, like shares of Apple, already have that deep liquidity. The problem is the barrier to entry and the cost in the tens of millions of dollars to be able to get to that point. In these new models, you can get many of the benefits of those public markets without the cost in this. But we actually expect that just like any disruptive technology, these models will displace the incumbents and the incumbents models such that all value is now freely is accessible to those who are qualified to hold it. It is legally transferred and efficiently transferred in these settings, but the services associated with investment banking are and access to great investment opportunities is ubiquitous. That's what's changing.
So I don't mean to put too fine a point on it, but do you see in the short run a path for trading tokens, or maybe not tokens, but that represent shares of, say, I'm trying to use old school names so that we're not, I want to evoke the old school companies like GM and Ford. Do you see them trading on your platform in the near term, or is that more a long-term thing?
Yes. So, well, yes and no. So specifically, a well-known entity that's already publicly traded on, say, the New York Stock Exchange, there's little advantage. Once you're in that model and you've already gone through the process of being listed, we don't see much advantage, though there's actually interest in being able to have 24-hour trading by tokenizing certain interests and allowing those to trade on 24-hour markets. There's some caveats and challenges to being able to do that with public offerings, but there is some modest demand there. We'll get there. In the more short run, you have private offerings, companies that have not yet gone public, and there are many. They're big companies that haven't gone public whose shares will benefit from this liquidity.
Sure. Well, fantastic. Dan, where did this idea come from? You obviously were thinking about this early. How did you come to this before the rest of us?
So in looking at the blockchain space, and I became enamored with Bitcoin fairly early on, and in looking at the space, I couldn't practically predict where the price of Bitcoin was going. It wasn't like I could put my kids' college education into Bitcoin, though I wish I had at this point. But just not having an investment thesis associated with it, it seemed too risky to me. So as I really began to think about how I might take things that did have an investment thesis and bring them into the space, it was surprisingly easy to make the leap that a share can be a token. And once I made that leap and built out and showed that this could be done, it was the rest was, wow, this doesn't just apply to real estate income streams or to traditional debt offerings or even to equity in a company. This is really everything that a security is. And of course, when you see the size of that market, they're just in the hundreds of trillions of dollars. And of course, that had me excited enough to quit my government day job and jump in head first.
Oh, fantastic. Dan, before you go, what's your superpower?
Well, let me say this. It's being honest into the market. That's a great question. There's a great quote. I'm not going to be able to paraphrase it, but we really live by these principles. If crooks knew how much more money you can make by being honest, people would give up being crooks and pursue honest endeavors. It's the right way to live. It's the right way to run a company. And it really does not sacrifice the potential for income. In fact, it increases your potential for income. So we live by these rules. That's our superpower. I know it's not a profound superpower, but it is a good rule set.
Yeah, I think it's very profound. Dan, before you go, would you take just a minute and tell people how they can learn more about Securities and how they can connect with you personally?
Yes, great. So we are at securrency.com. So securrency.com. Come check out our website for more details. And you can email us at info@securrency.com.
Fantastic. Well, Dan, thank you so much for being with us today. We wish you every success in helping to improve the financial markets.
Thank you, Devin. What a pleasure.
All righty. Let's do some good.
Thank you for listening. Devin Thorpe's mission is to end extreme poverty, improve global health, and mitigate climate change before 2045 by finding and sharing the stories of those who are doing the most good. You can join with other listeners to accelerate Devin's mission by visiting helpdevin.org right now.